Silver investors. While everyone is staring at a 3% dip on the chart and arguing about whether silver is overbought, the biggest mining company on earth just quietly signed a deal that tells you exactly what the next decade looks like. BHP and Wheaton didn't write a tweet. They wired $4.3 billion to lock up future silver, and that is the real vote you should be watching. I'm OG John Agee, and in this video, I'm going to walk you through why this $4.3 billion silver streaming agreement is a turning point, what it reveals about structural deficits, industrial demand, and the future price of silver, and why giants are moving now while retail is still arguing about a few dollars on the spot chart. Segment 1. What BHP and Wheaton just did and why it matters. Let's start with the facts of the deal because this is not a rumor, according to Intellectia and corporate disclosures. BHP Group has signed a silver streaming agreement with Wheaton Precious Metals worth $4.3 billion. This is described as one of the largest precious metals streaming deals ever executed. The structure, Wheaton will provide $4.3 billion upfront in cash. In return, Wheaton gets the right to purchase a significant share of the silver output from the Antamina mine in Peru for the life of the mine. For each ounce delivered, Wheaton will pay 20% of the prevailing spot price at the time of delivery. So Wheaton locks in long-term access to silver, pays a small fraction of spot as an ongoing cost, and keeps the upside as silver prices rise over time. BHP, on the other side, gets billions in upfront capital, de-risks part of its revenue stream, and can focus on its core base metals while monetizing silver as a byproduct. This is not a short-term trade. This is a multi-year strategy by serious players who expect silver to be both scarce and more valuable than today. Segment 2. What is a silver stream? Follow the money, not the marketing. To understand the signal here, you need to understand what a stream is. A streaming deal is basically this. A streamer, like Wheaton, gives a mining company a lump sum of cash up front. In exchange, the streamer gets a contractual right to buy a portion of the mine's production, usually silver, gold, or another byproduct, at a fixed, low cost for many years. In this case, Wheaton pays 20% of spot for each ounce delivered. If spot is $80, they pay $16 and keep $64 gross margin. If spot is $120, they pay $24 and keep $96. The higher silver goes over the life of the mine, the more profitable this stream becomes. Miners like BHP agree to streams because they get cash today to fund operations, expansions, or balance sheet repair. Streaming capital is often less dilutive than equity and less restrictive than debt. Streamers like Wheaton agree because they're making a long-term call that the metal they're streaming will be worth much more in the future. They want to control tons of metal-in-the-ground exposure without running mines themselves. So when you see the biggest names in mining and streaming agree on a 4.3B silver stream, both sides are telling you, silver is not a sideshow. It's a core asset in the coming decade. Segment 3. Why silver? Why now? Structural deficits in the background. Intellectia's write-up doesn't talk in memes, it talks in fundamentals. They emphasize that this deal is happening against a backdrop of persistent global silver supply deficits, driven by strong industrial demand and sluggish mine supply. Industry data shows the silver market has been in multi-year deficit, demand exceeding supply year after year. Cumulative deficits since the early 2020s are in the hundreds of millions of ounces, effectively burning through an entire year's mine production just to plug the gap. Intellectia notes that BHP and Wheaton are explicitly reacting to silver's role in solar panels, electronics, electrification technologies, and the broader energy transition. The expectation that these sectors will continue to grow, even as easy new silver deposits are harder and more expensive to find. So ask yourself, do you sign a record-sized stream in an oversupplied, dying market? Or do you sign it when you believe every ounce will be competed for in the years ahead? This deal is not happening despite the deficits. It is happening because of them. Segment 4. Antamina, a copper mine that just became a silver pipeline. Let's talk about the asset itself. Antamina. Antamina in Peru is one of the world's largest copper-zinc mines. Silver there is a byproduct of base metal production, meaning the mine exists primarily for copper and zinc, but the ore also carries silver that can be recovered and sold. Intellectia explains that the stream focuses on the silver byproduct. BHP and its partners will still sell the main base metals conventionally. Why is that important? Because it means even if silver mines are not being built fast enough, a lot of future silver comes from these big base metal operations. By streaming Antamina's silver, Wheaton is effectively saying, we want to own the silver coming out of strategic copper assets because we see that metal as crucial. And BHP is saying, we know silver is hot enough that someone is willing to pay billions today just for the byproduct stream. The fact that this is tied to a major copper asset also connects silver to the broader electrification theme. Copper, wires, motors, grids. Silver, switches, contacts, solar, electronics. This mine is supplying the infrastructure of the new energy system, and a giant just paid 4.3B to own the silver slice of that future. Segment 5, upfront billions. Why Wheaton is confident paying now. Most people focus on the size of the deal, but timing matters just as much. Intellectia notes, the agreement is expected to become effective around April 1st, 2026, subject to regulatory approvals. That means Wheaton is locking this in before the next wave of deficits and demand spikes fully hits the tape. The streamer is comfortable wiring billions today because they're betting that by the time the stream is in full effect, silver will be more valuable, and the real stress and supply will be obvious to everyone, not just insiders. They're not chasing, they're front-running. Think about the risk profile. If silver stagnates or crashes and stays depressed for a decade, a 4.3B stream is a bad trade. If silver enters a sustained period of tightness, deficits, export controls, higher industrial demand, then paying 20% of spot for ounces could be one of the best trades of this era. Wheaton is telling you which scenario they believe in. They are voting with capital, not comments. Segment 6, industrial demand, solar, electronics, and the new power grid. The article explicitly ties this deal to industrial demand. Intellectia highlights silver's critical role in solar photovoltaics, where silver paste is still the metal of choice for conductivity and performance. Electronics, from consumer devices to industrial systems. Electrification technologies, EVs, charging infrastructure, high-efficiency power electronics. The world is not de-electrifying, it's doing the opposite. More data centers, more AI compute, more EVs. More renewables tied into grids. All of that means more circuits, more switches, more precise, reliable conductors. Silver doesn't just sit in vaults, it gets used, and much of it is economically unrecoverable once dispersed in tiny amounts across billions of devices. That's why deficits are so dangerous. Once you eat through above-ground inventories, you're left with a world where a lot of silver is there, but not economically accessible at any reasonable price. BHP and Wheaton are not betting on YouTube sentiment, they're betting on physics and infrastructure. Segment 7, volatility and deficits. Why corporations move when retail panics. Intellectia points out that this streaming agreement comes at a time when silver has experienced unprecedented price volatility. Price spikes and crashes have become more violent as deficits deepen. For retail investors, volatility feels like chaos. For corporates, volatility is a signal. It says the market is thin. It says small changes in flow move the price a lot. It says the system is becoming more sensitive because buffers are depleted. And what do serious players do when they see that? They lock in long-term supply, not with 3-day call options, but with 10, 15, 20-year streams and offtake agreements. So while retail is asking, is silver going to 70 or 80 next week? BHP and Wheaton are asking, how do we secure millions of ounces for the next decade? And their answer was, write a 4.3B check before the crowd wakes up. Segment 8. What this says about COMEX and paper silver. Intellectia focuses on the corporate angle, but if you've been following COMEX data, you see the deeper context. At the same time as COMEX registered inventories are drifting under 100 million ounces and heading lower, open interest claims amount to several times that inventory. And delivery rates are rising, turning futures into a metal extraction mechanism rather than a speculation casino. Giant corporates are making a different choice. Instead of trusting futures to be there when they need it, they are going direct to the mines and locking up streams. Take that in. Paper silver is crowded, leveraged, and underbacked. Physical silver is being quietly removed from the open market via corporate deals. If you run a big balance sheet and you see that, you do exactly what Wheaton just did. You bypass the exchange and say, I want the source. The more deals like this happen, the less future silver is available for anyone who wakes up late and tries to grab it off COMEX or LBMA. Segment 9. BHP's strategy. From base metals giant to quiet silver lever, BHP is known as a base metals and bulk commodities titan. Iron ore, copper, met coal. They are not primarily branded as a precious metals company. Yet here they are, signing a multi-billion-dollar silver streaming agreement that monetizes a byproduct, strengthens their balance sheet, and indirectly ties them to the precious metals cycle. Intellectia's angle is that this deal strengthens BHP's financial flexibility and supports its broader portfolio strategy. For silver investors, the deeper message is even the largest base metal players now see a world where the byproduct, silver, is so strategically important that it can command billions up front. Think ahead. If more copper and zinc mines sign similar deals, a larger and larger share of global silver output will be pre-sold into long-term contracts, leaving a shrinking pool for spot buyers and futures traders. That's what a structural squeeze looks like in slow motion. Segment 10. Why this is a wake-up call for silver investors. So, what does all this mean if you're stacking silver, trading it, or just trying to protect your purchasing power? A few key takeaways from this BHP Wheaton deal. Big money agrees with the deficit thesis. You don't see a record size 4.3B stream in a market where supply is plentiful and demand is dying. You see this when insiders believe each ounce will command more value over time. Future production is being locked up early. Every streaming deal and offtake agreement takes supply off the table for the open market. The more of these get signed, the less shock absorber the spot market has when deficits deepen. Paper is optional, metal is not. Corporates are clearly choosing long-term metal exposure, not short-term paper trades. They're reducing reliance on exchanges that may be forced to cash settle or ration delivery in a crunch. Retail still has a window deals like this are happening while spot is still in the double digits. While mainstream coverage is minimal, and while most people still think silver is just a commodity, that window doesn't stay open forever. Segment 11. How to think and act in light of this deal. I'm not here to tell you what to buy or sell tomorrow morning. I'm here to help you think like someone who isn't going to get blindsided when the reprice hits. Using this BHP Wheaton agreement as a lens. If you're a trader, recognize that these corporate moves put a floor under the long-term silver story. Volatility and corrections will happen, but the big trend is being set by multi-billion-dollar contracts, not 4-hour candles. If you're a stacker, ask yourself, am I trying to be earlier than the crowd, or am I going to wait until streams and deficits show up in mainstream headlines? Accumulating ounces while the world is still sleeping on deals like this is a very different game than chasing once the shortage is obvious. If you're new and just watching, use this as proof that this isn't just YouTubers hyping silver. This is BHP and Wheaton putting 4.3B behind the same thesis in a far more serious way. Your edge isn't having more money than they do. Your edge is having more time, being early in the awareness curve. Segment 12. Final word. Ignore the noise. Follow the capital. So while social media debates whether silver at $75 or $80 is too high, BHP and Wheaton just told you what they think. They think silver is going to be central to the next wave of industrial growth. Supply will be tight enough that it's worth paying billions up front to lock it in. And the real game is not the next CPI print. It's who controls tons of metal 5, 10, 15 years from now. You've been watching John AG here, and I'm OG John AG. If this helped you see that a $4.3 billion silver streaming agreement is not just a mining headline, but a roadmap for where silver is headed, hit like so this kind of breakdown doesn't get buried, smash subscribe with all notifications on, and drop a comment. Who's early, retail or BHP? Tell me whether you think this is just another deal, or the clearest signal yet that the people closest to the mines are quietly front-running a silver world the spot chart hasn't fully priced in.